Something unusual is happening in the housing market right now, and it's catching a lot of people off guard. For the first time in years, buyers are starting to gain the upper hand. And that's not just a headline. There are now over 500,000 more sellers than buyers nationwide. That's a serious imbalance. But before you celebrate or panic, here's the key question. Does this mean home prices are finally going to drop? Or are sellers still calling the shots? The truth? It's more complicated than a crash or a comeback. And in today's video, I'll walk you through the data, the trends, and what's really going on beneath the headlines, so you can make smart decisions whether you're buying, selling, or just waiting. To understand where things are heading, let's start by breaking down why this gap between buyers and sellers is growing so quickly, and what's actually causing the shift. Part 1. The buyer-seller imbalance explained. Now let's talk about the biggest shift happening in today's housing market, and it comes down to one simple thing: imbalanced supply and demand. Right now, there are over 500,000 more home sellers than buyers in the U.S. housing market. That's not a small gap. It's a massive imbalance. But here's the key. Just because more people are trying to sell doesn't automatically mean prices are going to fall. Two main forces are driving this imbalance, and both are powerful. First, homes are still unaffordable for a lot of people. Prices remain high, and mortgage interest rates are still stuck around 6.8%. When you combine those two, it creates a wall that many buyers simply can't climb, so demand stays low. Second, sellers still want top dollar. Many of them bought their homes during the pandemic at ultra-low interest rates, 2.5%, 3%, and they're not willing to let go easily. So instead of cutting prices, they're just sitting, waiting, hoping someone will pay up. And that's where we are now. More sellers, fewer buyers, but not necessarily falling prices. A lot of sellers are just holding firm, even in a slower market. You could look at this in a chart. Seller activity is rising, buyer activity is flat, and yet home prices are only nudging up or down a little, depending on the city. So the big picture looks off balance. But to really understand what's happening, you have to zoom in. Because what's true in Florida might not be true in Ohio or New Jersey or Washington State. And that brings us to the next part. Because when it comes to real estate, national trends only tell part of the story. What really matters is what's happening in your city, your zip code. Let me show you what that looks like. Part 2. Real estate is local. Examples from the field. Let's talk about something that most national headlines don't tell you. Real estate is hyper-local. You might hear that the market is cooling, but that doesn't mean it's cooling where you live. It really depends on your zip code, even your street. Let me show you what I mean. In Miami, there are 3 times more sellers than buyers right now. Logic would tell you prices should fall, but guess what? Prices are up 5.6% year over year. Why? Sellers are holding their ground. They're not slashing prices, they're waiting. In Jacksonville, Florida, it's a similar story, about 2 times more sellers than buyers. But here, we actually do see a decline. Home prices are down 3.4% year over year. Now let's look at the opposite situation, where buyers outnumber sellers. In Newark, New Jersey, there are almost twice as many buyers as sellers. Result? Home prices are up 12.2% year over year. Same in Cleveland, Ohio. It's a seller's market, and prices are up 11.6%. So here's the takeaway. Don't apply national headlines to your local market. You're not buying the national average. You're buying your neighborhood. Now, that brings us to the bigger picture. Even though some cities are heating up and others are cooling off, when you step back and look at the national data, it tells a very different story. No crash, no boom, just a market stuck in neutral. Let's take a closer look at what that means. Part 3. No crash, no boom, a stalled out market. So let's take a step back and look at where things stand nationally. Year over year, U.S. home prices are up about 1%. That's barely anything. Not a crash, not a spike. Just drifting. It's what I'd call a stalled out market. Now, if we look at sales activity, it's the same story. Home sales in May 2025 were just as low as they were in May of 2024 and in 2023. So that's 3 years in a row of extremely sluggish activity, and that's not normal. And no, this is not 2008. There's no wave of foreclosures, no fire sales, no panic. What we have instead is a market that's kind of stuck. Sellers aren't rushing to sell. They're just waiting, sitting on the sidelines. But that doesn't mean buyers have all the power either. Here's something that surprises a lot of people. 31% of homes are still selling above list price. That number is down slightly from last year, but it's still in the normal historical range. So again, no crash, just a slow, frozen, oddly balanced market where neither side has a strong upper hand. Now, you might be wondering, If the market's so slow, why aren't more sellers dropping prices? Well, that brings us to something called the lock-in effect, and it explains exactly why so many homeowners are staying put, even in a cooler market. Let's talk about that next. Part 4. The lock-to in effect. Why sellers aren't selling. Here's the deal. Millions of homeowners locked in ultra-low mortgage rates during the pandemic. We're talking 2.5%, 3%, maybe 3.5% tops. Now imagine selling your home and giving up that rate just to buy another one with a 7% mortgage. Yeah, that's a massive jump in your monthly payment. So what's happening? People aren't selling. They're staying put. Even if they want to move, the math just doesn't work. And yet, inventory is up. In fact, the number of homes listed for sale is 13% higher than this time last year. So how do we explain that? Simple. More homes on the market doesn't mean sellers are in a rush. It just means some sellers are testing the waters. But they're not desperate. They're not slashing prices. And that's the key point. Prices aren't crashing because most sellers don't need to sell. They're still anchored to their 3% mortgage and hoping to get top dollar. This is why we say the housing market has price inertia. It's not just about the numbers. It's also psychological. People don't want to lose a good thing. And that creates a kind of frozen market, even when inventory is technically rising. Now, you might be wondering, if high mortgage rates are keeping sellers from moving, why are rates still so high in the first place? Let's break that down. 5. Mortgage rates are still high. Here's why. Let's talk about mortgage rates, because I know a lot of people are waiting for them to drop before buying. Well, as of now, the average 30-year fixed mortgage rate is sitting at 6.81%. And here's the key point. That number hasn't moved much in the last 12 months. Now, the reason mortgage rates are stuck, it has everything to do with the 10-year Treasury yield. That's the benchmark that mortgage rates tend to follow. And the 10-year yield has stayed elevated. Even though the Federal Reserve cut rates 3 times in late 2024, they've held rates steady so far in 2025, and they've given no clear sign that more cuts are coming soon. Why? Because inflation is still sticky, and the Fed wants to avoid fueling it again. But it gets more complicated. Right now, the bond market, which directly affects mortgage rates, is under pressure from multiple directions. Global instability, rising geopolitical risks, tariff uncertainty, ongoing fiscal problems, and talk of stagflation or possible recession. All of these make investors demand higher returns on long-term debt, which pushes yields up, and in turn, keeps mortgage rates high. So let's just be honest here. Even the Fed, with all their models and economists, hasn't been able to forecast this accurately. So if they can't predict where rates are going, you and I certainly can't either. That's why waiting around for a big drop in mortgage rates might not be the best strategy. Now, if you're looking to buy a home and you're wondering how to navigate all of this, the good news is you still have options. Let's talk about what smart buyers are doing right now, even in this high-rate environment. Part 6. What should buyers do right now? Let's say you're ready to buy, maybe not today, but sometime soon. The playing field has shifted just enough to give buyers a little more power, but only if you use it wisely. So here are 4 smart strategies for buyers in this 2025 market. Number 1, buy with a plan to refinance. Mortgage rates are still high, but they won't stay high forever. If you find a home you can afford today, you can lock it in, start building equity, and refinance later when rates come down. Yes, you might get a smaller home now, but that equity gets you closer to your dream home later. Marry the house, date the rate, it still applies. Number 2, start small. If a single-family home is out of reach, think smaller and smarter. Condos, townhomes, even tiny homes or land with potential. These are creative, lower-cost ways to get your foot in the door. The goal isn't perfection, it's progress. Number 3, look into modular homes. These are not mobile homes. Modular homes are built in sections off-site and assembled on your lot. They look just like traditional homes, but can cost 10% to 20% less. Same function, lower price. In a high-cost market, that matters. Number 4, negotiate again. It's back. Gone are the days when you had to waive every protection just to be considered. In many markets, inspection and appraisal contingencies are back on the table, and that's a big deal. They protect you from buying a money pit. Use them. You don't have to wait for the perfect market. If you're patient, realistic, and pre-approved, you may actually have more control right now than you realize. Now, what about the bigger picture? What can we expect in the months ahead as we move through the summer and into the rest of 2025? Let's talk about where the market might be headed next. Part 7. What's coming next? Market outlook. Let's talk about where this market is going next. Right now, most economists agree on one thing: 2025 is not going to be a dramatic year for real estate. Prices are expected to stay mostly flat, and in some areas they may even slip slightly. But don't confuse that with a crash. If you're waiting on the sidelines hoping for prices to drop 10% or 20%, that's not what the data suggests. Most models project national price movement in the range of -2% to +2%, basically a boring market. Now, will activity pick up? That depends on mortgage rates. Buyers are extremely rate sensitive right now. We've seen it over and over. As soon as rates come down just a little, demand jumps. If we see rates dip into the low 6 feet or even high 5 feet, you're going to see more buyers jump back in. But here's the reality. That's a big if. The base case for 2025 is that mortgage rates stay where they are or slightly higher. The 10-year Treasury yield isn't dropping, and the Fed has been very cautious about rate cuts. Even if they cut once or twice this year, don't expect mortgage rates to suddenly collapse. We're not going back to 3% or 4% mortgages anytime soon. Meanwhile, inventory is slowly building, which is good news for buyers. If that trend continues, we'll see more negotiating room, fewer bidding wars, and maybe, finally, a bit more balance in the market. But again, we're not heading for fireworks. No crash, no boom, just a slow shift toward a buyer-friendly environment. So what does all of this mean for you, whether you're a buyer, a seller, or just watching from the sidelines? Let's wrap this up with a few key takeaways and what I think you should really focus on moving forward. Part 8, final thoughts. All right, let's wrap this up. The housing market right now rewards patience and preparation. If you're thinking about buying or selling, don't rush in expecting fireworks. This is a slow, steady game. There are opportunities out there, but it's crucial to keep your expectations realistic. Prices aren't crashing, but they're not skyrocketing either. Sellers aren't desperate, and buyers have some negotiating power, especially if you understand your local market well. So here's what I recommend. Get pre-approved before you start house hunting. Know what you can afford and lean on your real estate professional to guide you through the nuances of your specific area. Negotiate wisely, don't waive your protections, and stay patient. If this video helped you get a clearer picture of what's really going on in the housing market, please hit that like button, subscribe if you haven't yet, and share this video with someone you know who's thinking about buying or selling a home. Thanks so much for watching. I appreciate your time, and I'll see you in the next one.